Welcome back to Pipz and Bitz, where charts talk and coins move. If you're into crypto, forex, or just chasing market money moves, hit that like and subscribe button so you don't miss a beat. Bitcoin is falling, again. And this time it's not just about crypto volatility. The trigger, a 1-2 punch from Washington and Wall Street. Former President Donald Trump has officially announced modifications to U.S. tariffs, signaling a more aggressive stance on international trade. While the political world braces for impact, the markets are already reacting. These tariff adjustments are stoking fears of inflation and global economic slowdown. As investors seek safer ground, risky assets like Bitcoin are taking the hit. Just days ago, Bitcoin was hovering above $119,000, but by this morning it plunged below $113,000, marking a drop of more than 5% in 48 hours. Then came the weaker than expected U.S. jobs report. Analysts had hoped for strength, a sign the economy was rebounding. But instead, the numbers revealed a softening labor market. Job creation slowed, wage growth flattened, and unemployment ticked slightly upward. Normally, weak jobs data might support Bitcoin by fueling hopes of interest rate cuts. But this time, the narrative shifted. Traders are worried. A slowing economy and high rates? That's not bullish. The Federal Reserve held rates steady last week, but gave no clear signal of easing soon. That uncertainty, paired with soft economic data, has investors ditching risk and bracing for turbulence. Technically speaking, Bitcoin just broke through a key support level at $115,000. Analysts warn that if this level doesn't hold, BTC could slide further, potentially toward the 110K or even 104K range. Indicators like the RSI and MACD show bearish divergence, suggesting fading momentum. On-chain data from CryptoQuant also shows that the number of addresses in profit is dropping fast, meaning panic selling could accelerate. At the same time, over 900 million in crypto long positions were liquidated, making this the second highest liquidation day in 2 months. So what are the pros saying? Crypto analyst Michael van de Poppe believes this is a classic correction, a shakeout before a potential rebound. Meanwhile, Robert Kiyosaki, author of Rich Dad, Poor Dad, warned of deeper downside ahead, calling this market dangerously overheated. Despite the fear, institutional demand hasn't disappeared. Spot Bitcoin ETFs saw slight outflows this week, but funds like BlackRock and Fidelity still hold billions in BTC. If the sell-off continues, many expect major buyers to step back in at key levels. Bitcoin is no stranger to chaos, but this latest slide is a perfect storm. Tariffs, soft economic data, and uncertain monetary policy all hitting at once. The big question now is, will BTC bounce or break? If you're a long-term holder, this may be your buy-the-dip moment. But if you're a short-term trader, buckle up. More volatility is almost guaranteed.